This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on Monday after fighting between Russia and Ukraine intensified over the weekend, although concerns about fuel demand in China and forecasts of a global oil surplus weighed on markets. Brent crude futures were up 55 cents, or 0.8%, to $71.59 a barrel at 0954 GMT, while U.S. West Texas Intermediate crude futures were at $67.45 a barrel, up 43 cents, or 0.6%. Russia unleashed its largest airstrike on Ukraine in almost 3 months on Sunday, causing severe damage to the country's power system.
China's refined fuel exports fell to an 18-month low in October, customs data showed on Monday, as weak export margins continued to weigh on shipments. China's total refined fuel exports in October, including gasoline, diesel, jet fuel and marine fuel, fell to 3.96 million metric tons, according to the General Administration of Customs, the lowest since April 2023. China's finance ministry on Friday announced it would reduce the export tax rebate rate for some refined oil products from 13% to 9% beginning on December 1, a move that is expected to deal a further blow to refining margins.
Moving on to the top news in the energy sector.
Russian gas exports through Ukraine to Europe, the main transit route for the gas to the EU, were stable on Monday, according to Kremlin-controlled energy company Gazprom, despite the company cutting off gas supplies to Austria's OMV. Gazprom said it would send 42.4 million cubic meters of gas to Europe via Ukraine on Monday, the same volume as on Sunday. Russia, which before the Ukraine war was the biggest single supplier of gas to Europe, has lost most of its buys on the continent as the EU tries to cut its dependence on Russian energy.
Almost 5 years ago, BP embarked on an ambitious attempt to transform itself from an oil company into a business focused on low-carbon power. The British company is now trying to return to its roots as a big oil and gas player with a growth story to match rivals, revive its share price and allay investor concerns over future profits. Their change of direction reflects two major developments: the energy shock from Russia's invasion of Ukraine and a drop in profitability for many renewables projects, particularly offshore wind, due to spiraling costs, supply chain issues and technical problems. Next, we have the top news in metal markets. China's imports of unwrought aluminium and aluminium products in October slid 8.7% year-on-year to 320,000 metric tons year-on-year, customs data showed on Monday. Imports for the first 10 months of this year totaled 3.17 million tons, up 32.4% from a year earlier, according to data from the General Administration of Customs. The data includes primary metal and unwrought, alloyed aluminium. Imports of bauxite, a key raw material for aluminium, rose 11% in October to 12.29 million tons. For the first 10 months of the year, imports were up 11.9% to 131.56 million tons.
India will announce a formula for defining so-called green steel by mid-December and is working on government procurement for decarbonized steel, a government source familiar with the matter told Reuters on Monday. The Federal Ministry of Steel did not immediately respond to a Reuters email for comments. The official could not be named as the details were not yet public.
We will now look at the top news in the agricultural sector.
Palm oil prices are expected to remain above 4,750 ringgit in November, supported by export supply uncertainties and rising soft oil prices, state agency Malaysian Palm Oil Council, MPOC, said on Monday. MPOC said palm oil demand is anticipated to remain stable in November despite rising prices, driven by the upcoming Chinese New Year and Ramadan celebrations. Thailand's recent export ban on crude palm oil exports until 2025 has further tightened supply. India imported approximately 800,000 tons of crude palm oil from Thailand in 2023 and will now need to source these imports from Malaysia and Indonesia for the remainder of 2024, it said in a statement. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.